Good afternoon, Scott Rella, T3 Live. Welcome to today's recap. So it's Monday, another day down. The grind continues, the rotation continues, and earnings have all been coming out. Before I get into Apple, let's quickly take a look at the S&P. Look what happened today. You look at the chart here, still on the move. You go to the low here in November, tested here, tested there. This time traded below, but came right back up real quick. You take a closer look here. You know, when you do trade these things a little bit more actively, this is when, you had this little descending channel here that broke to the upside. You saw some commitment, and there we are. All right, last few times we broke out here, you failed, broke out here, failed, went downward, broke out above here, failed, went down. This time broke out above, just pulled back to the 8-day. So with that being said, we just made another move here. You will see what happens with the S&P tomorrow. If you look at the consumer staples, that was the strength today. Big time breakout. You look at that across the board. P&G, Pepsi, you name it, those are the ones that went today. Not stocks that I typically focus on, but look at this clean move. We talk about rotation, and you did see some movement into some of the housing stocks. If you take a look here, this was when it woke back up, when people pretty much realized that QE is going to be around a little bit longer. Here it's letting the 8-day catch up. We'll see what happens if it could create a bull flag and then go above that 31.5. Look at the, what's it called, utilities. Also, another nice move, when it broke out here, you saw some commitment, let the 8-day catch up, and now it's coming into some bigger resistance, so we'll see what kind of pause. But overall, there's been a lot of action, and today some of the high beta names are weak. So we had Apple come out, seemed like a very positive report. iPhones were a little bit better, Macs were okay, iPads were a little light. Just the problem is the stock came from 445 last quarter, and that was on the gap up. So from 445 to 530, it needed to be tremendous to get that follow through for what I was looking for with the call spread. With this report, I figured there was a lot of optimism priced in, so that's why I went with a call spread, which is a little bit more conservative because the premiums were so high. You take a look at the chart of Apple, and you will see it's had a heck of a move. From this lower area that we were talking about, okay, which was a nice accumulation pattern. You then had this gap up right there. That was the last quarter. So last quarter on earnings closed at 420. So 420 closed at 530. It's 110 points difference in a quarter. So with that said, it needed to be somewhat blockbuster in order for continuation. Our last little call spread we had that paid off was right here when it broke above the 493. So now question is, what type of digestion do we have? Because the numbers were pretty solid, but just probably not enough for it to break above this 533 pivot-ish, to then get to what we were looking for into the 555. Doesn't mean that Apple's done. It just means that it might need a little bit more time, that we'll have to wait to see a setup happen. Could be tomorrow, or it could be in a few sessions. But for right now, it is a little down after hours. So you take a closer look here. Let's see what it's doing, on the 5-minute chart, 24 hours. Here's your 5-minute chart. Let's go. Okay, there it is. So basically, first move was to the upside, and then it got hit pretty quickly. That was your little move out of it after hours. Couldn't hold that 534, so there was no momentum there. Now it's developing somewhat of a, bear flag after hours. So I would say, if it stays in here, don't touch it. It gets above this 521. Maybe with the conference call, they talk about China Mobile or some products, and it comes back up. But I think don't lean on this short. Just give it some time. If it were to break below 510, then I think that you see those lower levels. But ultimately, I think we hold in there. It just, the people that are going to win probably with Apple this time is going to be the premium sellers. A lot of people bought calls thinking it was going through the roof, paying $15 for 530s. A lot of people were buying puts, $15. So, when you do that, options are inflated into earnings, high volatility, heavy premiums. Sometimes that happens. With Google, people who bought the options, they won. Amazon, people who bought the options, they won. Netflix, people who bought the options, they won. Here, there was a pretty big move going into it. So even if Apple's down $5-6 tomorrow, the people, the guys that decided to sell a call spread or a put spread, maybe they're the ones that make the short-term money, and then we'll figure out another setup. I'm looking into some other names. Facebook has discounted itself coming into earnings. Okay, this is when we had a little bit of a short on, and now it's trying to hold a 21-day. I did nibble on a third of the options that I would want into potential earnings. It's had a huge move since earnings. So with that being said, I think it's actually healthier, after all these multiple buy areas that, it's pulling off, so it's not priced for perfection going in. So the longer it stays here, maybe even pulls in a little bit more. I think, if you're playing for a new move high here into earnings, at least you're getting a little bit better pricing. We've been trying to stay with Facebook to the long side, so I feel like also, I should go with the call spread. It deserves it considering the type of action it's given us since earnings. Last quarter we had a really nice option play from here, and then you had better trading along the way. So now it's pulled back, and short term we could trade it versus the low here of 49.61. We shall see. As far as LinkedIn's earnings are tomorrow after the close. It too, getting very wishy-washy up here. People get a little skeptical going to earnings after the size of move we just saw. Still hangs around. We'll revisit this tomorrow. I'm probably not going to do an option strategy into this one because, again, it's had a huge move, so the premiums are probably high, and I might just avoid it and trade it after, or just avoid it altogether. You did see some news out of JCPenney's to switch some gears here. You go to the daily chart. Nice little move. Let's see what's going on here with JCPenney. Did I just lose? Let's see. What's going on? Why can't I? Okay, let's go to I guess we go to the 55-minute. All right. Well, anyway, this stock ignited today above this area, and then you saw some commitment for the first time in a while. Stock's been battered and bruised. I'm thinking maybe it can continue now that they announced some better sales. A lot of the overhang from when they did that poor secondary all the way up here, wherever that was. Remember when they said everything is great, and then, secondary, broken price, boom, so maybe we got to move up there. So I'm along a little bit of that. Banks are interesting. You take a look at the banks here, you go to the daily charts, and you'll see that they're getting a little tighter. Okay, not great setups, but they've been out of play setting up once again. In order for Goldman to be any better, it's got to trade above this. Okay, right there, this is 162.50. That could be a tradable price if the money starts to rotate back into the banks. Wells Fargo also, pretty tight pattern here. So with that said, deserves a little attention. Tight patterns deserve a look. And there's Wells Fargo, nice and tight, 8-day caught up. You also have a downtrend right here. So this could be something for tomorrow. Bank of America, which I talk about keeping in the drawer. I think you keep it in the drawer, and still I don't see a great setup. This sideways channel is still intact. It's smack in the middle with not a lot of action here, so I would just continue, just keep it on the side. Gold tried to break out and couldn't, kind of annoying. I tried to be long it today. It pushed above this prior high, and then I got out of it when it came back below. You do have a little bit of an ascending channel here that looks good, but if it breaks to the downside, people are trying to have faith in gold, but gold's been a situation that's lacked a lot of faith for the entire year. So with that being said, I think people have it on a short leash just like me. And to make a long story short, Apple's out. We'll see what type of trade we get tomorrow. I have a call spread. Chances are it's going to be worthless. Your risk on a call spread is your premium paid. We talked about financing at least with the spread versus straight calls because of the size of the move we've seen in Apple. Who knows, maybe tomorrow, or the conference call, they talk about a buyback or something that starts to go, and then the 555s that we sold go worthless, and maybe there's some premium left in the 530s in order to salvage that and just move on. So if you want to be involved for earnings, you be involved with options because at least it's calculated, and then after a few sessions, you go back with an equity plan because the earnings risk is out of the way. So with that said, markets continuing to rotate. I know the action's grinding, and for us it's been a little difficult because you have stocks moving like the consumer staples, some utilities, some home builders, so not exactly in our universe of stocks that we like to trade, which is like high beta and the banks and the solars. We like stocks that move. We're in the moving business, not in the storing business. But at times you just got to look at charts and get rid of the sector and figure it out. But again, it happens fast. That's why you try and get prepared. So with all that said, hopefully you had a decent day. You survived the after-hours trading of Apple, and there will be more opportunity there as a new setup shows its face. And then tomorrow, still have a lot of earnings. We have the Fed Tuesday, Wednesday. So don't get frustrated too early in the week. We still got 4 more days left, and that's about it. Also, as far as Twitter is concerned, I know there's a lot of hype around this new issue. Make sure you get one of your 7-day trials if you're not a VTF member, because we do love to trade new issues. We have a way of measuring supply and demand on the first day. We call it the art of the first day. We've used it for LinkedIn, we used it for Facebook, we used it for so many different IPOs to measure whether or not there's a trade there that first day, and then a few sessions thereafter. Then obviously, once a pattern develops, we try to figure out whether there's a longer term opportunity. Because you saw Facebook got sold off hard, but if you entered it correctly, it went to 55. But if you bought it wrong and sold it wrong and got frustrated, you were left in the cold. Whereas LinkedIn was a great new issue, had a nice squeeze in the afternoon, was set up better, moved quicker, more fluid. So every new issue has its own personality. So I'm sure Twitter will have its own personality. So we'll try and figure that out, as truly technicians are behavioral psychologists of price action. So stay tuned. That new issue is not till November 6th, so you have a bunch of time. Be well. See you in the morning. Have a good night.